Hello, and welcome to Urban Hood Money Talk. It's a fact that we need money to enjoy life and focus on the things that we really like. I'm your co host, Allie, and I'm here with Mushi Buyan. Our mission is helping you gain financial freedom. You're listening to one of our special weekly market talks, which provides news on the upcoming week that may be important to traders. And we're super excited that you're here with us.
Welcome everyone. Everything I'm sharing educational purpose only. We have seen this news. How many of you remember this message came out in Elon owns this? We are talking about Twitter. Yes. But I was surprised to see this data. Jack Dorsey owns 2.3% and Elon is 9.2% of the shareholder.
That's crazy.
This is crazy, right?
I would have never guessed that one. Wow.
That's when I thought you gotta say that, man, the founder of the organization
has less at stake than Elon Musk.
So it tells what's gonna happen in this company. You know what Elon is long time is trying to do. He mentioned he wants to create his own social media and all this. His ultimate goal was buy them out.
Yeah, and he probably will fire Jack Dorsey.
Jack Dorsey is no longer at Twitter.
Yes.
Oh, that's right.
He's not a CEO anymore, right?
That's right. They made him step down. That is correct.
But they are very good friends. They both are buddies. So of course,
Jack, my brother is the CEO with the same last name.
There you go.
Just kidding.
Yeah, I was gonna say.
Then we have seen the Nasdaq got hit hard, like 550 down in a way. This is crazy. Crazy move. And I said, when I saw this number, it's 550, it's like 3.86% Nasdaq, where S&P hanging out. S&P just like it barely just moved 57 whole week. It's just a 1.27%. It's
Right.
good. It's still around 4,500 areas in SPX is sitting there, which is still a good sign, right?
Yeah.
So overall, what happens to other indices for last week? Nasdaq 3.9% down, but S&P 1.3. But look at 10-year treasuries, 0.3 yield. That yield went higher, and that's our good old oil stayed below 100, which is still is good. That tells the economy is not bad. We are some of you saying, "Oh my God, we are going to go recession. We are going to get recession." Think twice. We do.
It's still possible. It's still possible.
Recession. Those who understand economics, recession is not the only way to balance what's happening currently in the market. I'll share with you some details next. Look at on the left side, what happens in the bearish signal, and the right side, everything, and on the bullish signal. And all the economics indicator, they're looking at consumer sentiment, inflation, sector, commodity, everything usually they look for. Whenever recession happens, we see commodity goes up, and we see that some of the defensive goes up and stuff in the bear market. On the right side on the bullish market, particularly on bullish signal, what's happening currently? Look at employment numbers came out, is very strong. And last month the jobless number to claim historically is low. It's almost like 1969, 60s, 70s. That number is so low, that jobless number. Corporate earnings, the raising, this is last quarter was very good. Regardless of what happens, some of the business proven that we heard in Tesla, Amazon, Microsoft, they figured out a way to make money in this situation. There are others, with the high PE, still they have to prove to the market. Credit spread is getting 2 years, 10 years, getting narrow. Is getting closer, narrow. Yeah, that's kind of scared people. All of a sudden, very quickly, that spread is getting bigger. And that was one of the things coming back. People, what? Maybe their Fed is becoming hawkish too quick. ISM number, PMI number consistently is showing that it's solid. Still, we are growing due to supply chain numbers that we are seeing that we see that in certain sector, that their business have orders are slowing down because those business they're not able to deliver. Especially now, look at in auto industry, the car is going in nightmare. When you see that EV market, Tesla is coming up all the crazy numbers they're delivering, where their next competitors they don't have even raw materials to take orders to deliver what they promise they can do it. So one is figuring out a way in this current market to grab whatever supply chain and secure next years for them. And the others are still struggling to figure out what they said they can do. They're not able to meet those commitments. So it's a world where you cannot sit there and wait and figure. You have to be creative. So investor sentiment, that's one is coming back now. They're figuring out if the last week what Fed is saying they're going to be more hawkish, means we're going to go a little deeper later on, or should they be still investing now, or they'll pull back? So now people are just being cautious, and because of being that cautious, boom, like last week was the sentiment. A lot of NASDAQ got hit big time because of high growth. If you look at historically on the 2016 to 2019 data, especially whenever Fed says we are going to be tighten our balance sheet, we are going to reduce the number, and then we have to be control the inflation and so on, and GDP and recalibrate with this. So that time, what happens on around 2017, 2018, Fed announced that they will begin reduction, where they had about $4.5 trillion budget that time, and they made the announcement. When they made the announcement, they did not do it right away. And Fed policy also looking at the other one is the purple tells you the Fed policy on the right side as it goes higher and then come down. But you look at it in October 2018, 27 October, that time slowly, when they made the announcement, and then what happens is on 16% stock market was going higher for 12 months when Fed was starting slowly reducing their budget. It's 12 months that 16 market went 60% high on that equity market. Those who is dumping all this, they say, hey, should I be investing in stock, or I should be looking at elsewhere? And the pullback, and the Fed look at on here last year on 2019, Fed came around when things all of Corona got hit, and then slowly we are seeing that Fed is coming back. Okay, we'll they try to protect that economy and buying back again, and now it's almost like $9 trillion. But on here, one of the things, the lesson learned from here, you can look at it when Fed tried to reduce their balance sheet, and then they came down that bring that inflation down to close to below 200 that time. Yes, historical saying there are a lot of other sign that they have seen in economy slow down. What I shared earlier, that look at the bullish signal and bear signal. History can give you enough information to know what can I learn from it, and is this going to repeat itself? But the current situation we are facing is a different beast we are dealing with. So just like earlier, when Jay mentioned, and look at my trade, hey, it should have worked, it didn't work, or still you have a chance to make it to work and readjust yourself. That means we have to be also more hawkish with our portfolio, short-term or long-term, and readjust our thinking process.
I can just add one thing about the difference between when they reduced the balance sheet in 2018, when they actually raised rates, and compared to now. Mm-hmm. Back then, the Fed said, hey, let me go ahead and raise rates. And then what happened, the economy, the stock market dropped quite a bit. Mm-hmm. And they just went back and started, lowering rates again. But the difference between then and now is that now we have a 7.9% inflation. Mm-hmm. Back then, we had no inflation problem. Mm-hmm. But now if the market drops down, if we still have an inflation problem, they're going to have to make a decision and say, we have to attack inflation or we save the market. So back then, they had a lot more choices than now. Now they're in a tight spot.
Had a lot of also weaker on 2019 employment was not that historically people could not find a job. It was like already some of this indication on the right side did not give you a signal knowing that, hey, this is the same situation we are dealing with. Fact is, this equity market pullback last week, we have seen it still since mid-March, it's 10% higher. Equity market performed all of a sudden. Slowly, we saw the indication that bear market is turning around, getting into the bullish side, and which you saw the signal. The March PMI number showed a strong demand in those numbers. And in the demand, also they saw the strong demand, but business cannot deliver due to slow order and production slowdown. So we have seen that what China happened. China shut down for weeks, because that's going to make the whole the supply chain disaster in whatever sector you are in. Right? And the other things that when we talk about recession, and we are seeing the signal, people are saying, look at this yield curve, the gap is getting bigger and higher. But you have to look at other things, indicator. Usually whenever they look into indication for recession, all these, the yield curve, credit spreads, jobless claims, PMI numbers, and then building this new construction in housing, building permits, and all this is adds on. They look at all those areas. When they look at all those areas, one or two you are struggling, but the others are outbidding. That's when they figure out, are we getting into recession, or we need to readjust our thinking process? Not inflation number, very low jobless number. There are savings. There are more over $2.5 trillion savings fund people putting on the side. Means we see that a lot of people, even you look at your friends or people around, and then they'll say, you know what, I'm happy with my current house. I'm happy with my current car. Or maybe I will wait. It might slow down. So we see that people started changing that habit of new things. I needed to have it. Now people getting into more savings habit than.
Not very American to save money.
Now we are becoming that.
Yeah, we're learning from the Asian market.
You are going to see next week that when banks coming up, bank going to release their earnings. And that time, one of the things they are looking into that, do people still put their money in the bank and then say, you know what, I want to go in conservative mode and I want to put some money in the bond. Economic health indicator since 1990 that you are looking at, and in 2022, US, when US come to recession, this is one of the things that they're looking that when economic health, all these indicators I mentioned earlier, and the recession. So there is a number they're looking at from 0 to 1 in that on this curve. In this two, when they do the variance chart, and figure out correlation, where does this chart in it stays. If you look at it, whenever we had a recession, 2008, at that time, this number was way below 0.5, around 0.3, and very low end. But now, if you look at now, 2008, this number is almost like close to 0.9, 0.8, 8.67, that area. So that's why I was showing you all the indicators you're looking at. When they look at the correlation and try to figure out, are we heading to a recession? Doesn't make sense. You have to look at other things, other situation, and why we are in this trap. When businesses, we have the demand, but we cannot deliver because supply chain. Why supply chain? Who knew this war going to happen? Russia and Ukraine. Who knew that? Nobody knew that, right? But it happened. But that also causes the whole supply chain go down in Europe side. Even in America, we also get affected. The whole world is getting affected in that, because they're one of the biggest supply chain in commodity, in energy, in those areas. So diamond, gold, you are watching that market there, diamond market, one of the top, the exporters, Russia. So when they are getting all the sanctions coming in, all the other business are going to get affected. Still, US dollar is strong in the market. If you look at this curve at 2 years and 10 years, the gap is big, that gap. But then this is not the gap. Starting Monday, when 10 years yield coming in, look at, on Monday, it was around 2.3 area, but we ended up 2.7. Big 10 years yield went so quick. And I wish those who is in tech, and including myself, I wanted to see NASDAQ go like that. Then we would be all smiling with our portfolio. It just reversed, right? So the widening the 2 years and 10 years the curve. So next week earnings are bank earnings coming in. Morgan Stanley on Thursday, Wells Fargo, Goldman Sachs, and on Wednesday JP Morgan is going to come in, and our favorite when some of you have seen that their Bed Bath Beyond is started making some noise. We'll see what they do. And airlines earnings also going to come up next week. Wells Fargo, look at where is Wells Fargo. Their analysts are all is mentioning that they think it's bullish, and then plus minus, IV is 5.7% this coming week, but they are bullish on this one. So what am I looking to buy next week? Or first of all, before we go next week, Asia market is going to release their central bank rate cards. So you see that still there are others in the world is going after the rate card, not like us, hey, we know that we're trying to be more proactive, and Singapore market is expecting 25 basis points. We'll see what the news comes up. Hopefully it will stay on track what the market expects. And in Europe market, focus is still on the war. And the Ukraine, the president, he asked the whole world that they need a weapon. And before they were more defensive side, now they're going back after Russia that would be more offensive. So they're asking for those heavy artillery and all those other weapons, so they can go and attack and so on. Not only protect themselves, and they want to push them back, right? US market next Friday, this coming Friday is going to be short Friday, Good Friday. So know that it's those who has weekly contract, be very careful. And just like many of you, I got into this greed on Friday. I sold a lot last week, but I just wish I would have sold more. Consumer inflation data is going to come out this coming week, that on Tuesday. So keep an eye on this one. Still, they're looking, say, hey, all the high number, remember the indicator I mentioned to you, that they are going to see that is this still expected as 8.4 expected. Now, if it does, they're now Fed and the others are going to go after Fed. You should stop being so hawkish, and where you mentioned that you're going to increase the rate 50 basis point. It happened in 2000. So why do we have to be so aggressive? Where it have to remember what we went through in 2000 and in that crisis. We are not in that crisis. We are much better, strong. All the indicator shows you. Maybe they don't have to go that aggressive and so on. All right. So that's the one of the key number, and the earnings are coming up. Earnings are coming up, as I mentioned, that is starting on Wednesday. And this on Thursday, there's the retail number coming up. That also another indicator showing that is still the consumers are strong with the purchasing power and so on. This is one of the things this coming week, that last Friday when I looked into on the weekly, let's see what people are expecting this coming week. You see that Tesla is always whenever we have seen last few weeks, Tesla usually goes on the bullish side and bear side, a lot of call and put. But I was surprised to see Tesla huge call side came in last week, Tesla, Apple, and all these, where you see. And on the right side, Apple is the one, I say, underdog. People are going after Apple. A lot of put on Apple this coming week. We'll see what happens, Apple and QQQ. So one of the dark pool data came in last week in Exxon. Look at the $87. Somebody bought 69 million. $87. So energy still is, I guess, something.
Wow.
Yeah.
Seriously?
Someone puts that much money on their 69. Okay, they know something. Look at 69 million, and then went back later on. And
Either that or 69 million is like 1% of their money.
Yeah. 152 million came in right before that. So yeah, slowly people are betting on Exxon.
Their earnings already came, right?
I don't know. Just the earnings came in, or because of this whole
Ukraine
petroleum and oxy, last week, those
right.
Oxy, you saw that. I came out. So this coming week, and we'll see. There is a lot of calls we have seen that is came in $68 that people are putting money on petroleum.
Wow.
So did anybody play here petroleum by any chance? Play with this?
Yeah, I have Occidental.
Huh?
I have positions in Occidental.
Yeah.
Bullish position.
Bullish position. Yeah. So you're smiling now, right? Let it go. And everything was last Friday, everything was going down, but those who has it, at least one is good, and it's keep getting green and green, and that put you smile on your face, right?
Yeah.
It's not that bad. The others will turn around. But Halliburton, we have seen that. Tesla, you guys already saw how it got beaten up. We do think Tesla stayed very strong on 1030, the price area. 1030, look at it. It went many times, went down, came back in 1030. So Tesla is good. Hopefully, it can stay strong. And then if it does, I would not be surprised if overnight any other surprise doesn't happen. As usual, we see Tesla usually open up with a gap up and try to do all the whole power hour show. Facebook got beaten up, but not much. It stayed very strong on 223 areas.
Right.
So Facebook is something that it did is proved. All the others got pulled back. I was thinking Facebook might come back as just like everything went down, but Facebook stayed very strong.
Yeah, the whole social media went up.
Yeah, yep. And along with the button, Twitter got beaten up Friday. Twitter from 51, 52 came down to 46.
Yeah.
I added good
amount. Go lower. It needs to go lower before people are going to buy it again.
I sold when it went to 59 and stuff. I had got in the market again big time. If it goes down more, I'll add more.
Exactly. Yeah.
Well, recession is 6 to 9 months after the inversion. So
yeah,
I don't think anybody was thinking about recession already.
Yep, exactly. Usually it takes about a year, so take time. But we are saying that everything else is very strong. All right.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom